Oh man, I'm so excited to do this with you actually. There's so much stuff happening in stablecoin universe and I cannot just not talk about it with someone. So basically, I know you have very little understanding of what the crypto
Zero.
stablecoin world is. But I just want to basically show you what's going on and break down some of the stuff so that you are pretty much like completely in Web 2 world. You don't have much of understanding of anything
Right.
that's happening in crypto, right? But like once I start breaking things down to you, it will make so much sense. So yeah, thanks for doing this. Let's
No
basically
worries.
this
And
episode.
and I think
Yeah,
it
go
will
on.
be good for the audience as well, for someone who is as much of a layman as me, because I
Yeah,
will get those normal basic curious questions that every beginner would get.
absolutely. Yeah, yeah. That's the goal here. Yeah. So basically, the question that I will try to answer in this episode is what the hell is a stablecoin, right? So stablecoin in general is think of stablecoin. It's a currency, and it's a currency that is generally pegged to the US dollar. Now, a stablecoin can be pegged to any currency, and it will just show you the value of that currency. Now, the most popular currency in the world is USD, so we'll just the primary stablecoins deal with USDs. So, as I said, basically one stable coin is equal to one US dollar. The most popular stable coins are one by Tether, which is called the USDT, and the second most popular one is the USDC, which is issued by this American company called Circle.
I do
Uh,
have a question. While I was going over the topic, I heard about a controversy with Tether. That
uh-huh.
something about. Can you go a bit
Yeah,
deeper
sure. I
about it?
mean, of the two stable coins that we currently have, USDT and USDC, Tether is the one with a bit of shadier, with a bit of shady background. I will say they are not completely transparent with the way they do their stuff. Like they are established, their company is registered in the British Virgin Islands. They operate through the Bahamas and stuff like that. And whenever a company is going through these sorts of like sketchy regulatory territories, that means like they have something to hide. Either that or the number two option is basically like the regulations simply don't allow you to do this kind of stuff in countries like the United States or the United Kingdom or Singapore, areas like that, so you want to take the easier way out. So that's why USDT is slightly more controversial, whereas USDC, they have always been on the straight and narrow path. They have tried to work with the US government. They have basically tried to be as transparent as possible. So I will basically get to the regulatory side of things. Like there's actually a lot of good stuff happening in terms of the regulatory landscape. Especially there is this act coming to the US Senate. Actually, as we speak, the US Senate will vote on the Genius Act, which will regulate the stablecoin industry for the first time. So yeah, I will get into that. But just to break things down, like why are we talking about stablecoins, right? Why is it so important?
Yeah,
So just
right.
to understand a couple of things, like stablecoins move about $250 billion every day across the world. Like even major banks cannot move this amount of money without like so effortlessly. Like if you transact through banks, the amount
And
of centralized.
why can stablecoin do that? That it can move so much
Okay.
money so quickly.
Yeah. The answer is simple. It uses blockchain, whereas banks don't. Banks will use some sort of a Swift system, and the more private entity that you have, the more centralized entity and authorities that you have, the more checks there will be. Like everybody will have an opinion. Like if you look at bureaucracy, or even if you look at like private industry bureaucracy, so everyone has to sign off on something. Like if you try to move $1 million of your own money from your bank account to someone else's, like first of all you will have to show like why are you moving this amount of money, like what kind of deal are you doing, show us the details, give us the information on your counterparty, and then the bank will let you do it, right? Even like I'll give you a very simple example. Like in the US, you cannot withdraw more than $10,000 in cash from the bank without the bank asking you questions and noting this transaction down for further verifications, let's say. In India, where we are based, in India, if you transact more than, let's say, the equivalent of $3,000 or $4,000 in a single month, or let's say multiple transactions worth $3,000 or $4,000 in a single month, the income tax department will want to have a chat with you. The bank will note down your PAN card information, like the financial card ID that we have in India, right? So that's because the banking industry is riddled with regulations. You cannot like take one step without someone asking some very, like, let's say, like very private questions, like they're sniffing through your private affairs. And that's where stablecoins can do all of this stuff, because stablecoins use blockchain, and blockchain is completely decentralized. It doesn't Nobody asks you a question in blockchain. In blockchain, especially, what happens in blockchain is essentially, you have a wallet address that you want to send the money to. You select a specific blockchain that you want to send the money through, and you basically type the wallet address in, type the amount in. You have to pay a limited amount of transaction fee called gas fees. You approve the transaction, it goes. It pretty much settles instantly, and nobody is there to ask you any questions, as long as you are within the crypto sphere of things. Now, the moment you want to, again, like, so in crypto we call these on ramp and off ramp. On ramp is when you convert your fiat money to cryptocurrency. So like you will have to basically go to an exchange, convert, buy Bitcoin or Ethereum or even stable coins like USDC with your fiat currency, right? So like the bank is sending this amount of money to the exchange, and then in return the exchange is giving you the crypto, and then you have been on ramped, and now you are in the crypto world. Now let's say you have got your crypto, you have earned some amount of crypto that you want to cash out. So then you want an off ramp. So that means the exchange sends money to your bank account. Like these on ramp and off ramp points are the most sensitive ones in terms of checks. As long as you are in the crypto universe, nobody really asks you any question. The moment you are transacting with a bank, all sorts of red flags start coming out essentially. And that's where, like, if you are doing transactions of large amounts, starts asking you questions. And actually, you know what, like, even in exchanges there are two types of crypto exchanges. One are decentralized exchanges and one are centralized exchanges. Centralized exchanges comply with government regulations. So if you do like huge amount of transactions without real clear let's say verifications, the centralized exchange can restrict your account for a period of time until they do their checks, so yeah, whenever you install an authority, they start asking too many questions. They start looking into your stuff, and they start delaying the process. That's essentially what a blockchain goes circumvents, like goes around and solves the issue for you. So that's essentially why you want to use stable coins as much as possible and stay within the blockchain universe as long as possible. So this is what will be the difference between a stable coin and your general USDC, your general USD. Yeah. So that's what it looks like. Now uh, with your stable coins, you can do a bunch of stuff. Obviously, you can trade crypto, but that's not all. Like, even if you do not want to trade crypto, like for example, you have zero crypto holdings, right? But let's say you want to save in the US dollar. How do you do that? Like, you have to in the Web2 world, you have to create an US brokerage, a US US based bank account, and that's not an easy thing to do. First of all, and then basically go through give them all of the information that they require, your financial information, and they let you open an account, and there you can save whatever amount of money that you want to, and then you will have to disclose this in your taxes later that you hold some amount of foreign currency, right? The complications are just huge. Now, like, but if you want to save in foreign currencies like the United States dollar, you can just buy a bunch of stable coins and hold it. Nobody is asking you any questions, and just that easily you have access to the USD. So like, just for example, like our Indian rupee is depreciating 2.5% against the dollar every year. Like only a few years ago it was in the 70s. Now it's 86 rupee for a single USD. So it makes much more sense. Like, if you are just saving in dollars, if you are just saving money, why not save it in dollars? And stable coins makes this process extremely easy. What do you think? You are muted.
Yeah, something I'm curious about is what happens when the demand sort of surges or drops? How is the peg maintained?
Yeah, that's a very interesting question. So let's look at so what stable coins actually work, right? That's the question. Like, how do stable coins defend their peg? How are they always like $1 at all points, right? So they have to have a reserve. It's not like it doesn't work like supply and demand. Like if supply comes down, supply goes up, the value goes down, then it's not stable, is it? It's just basically a volatile investment currency. But that's not how stable coins work. So I will just give you the example of USDC and Tether. USDT. These two, both of them are private stablecoins. What that means is they have one-to-one reserve. By one-to-one reserve is means like the amount of stablecoin that they issue, they will have the equal amount of assets backing that amount of stablecoins. So, so that means, let's say, currently USDC has about 60.9 billion stable coins issued. So that's $60.9 billion worth of stable coins they have circulating in the market right now. But to maintain that $1 peg, they have $61.2 billion worth of assets in their let's say in their reserve. So what that means is any moment the demand surges, they will just buy more assets and then they will issue more stable coins. And whenever demand goes down, they will sell those assets to basically work with the sell pressure that they have. That's pretty much how it works. So I will let me actually I did not want to go on the reserve side of the argument, but since you have already
Hmm.
asked the question, I will let me try to show you what I'm talking about here.
Sure.
Let me see if I can share my screen. So both Circle actually issues uh, their reports on like what they're doing. So this is the transparency and stability page of Circle, the issuer of USDC. As you can see, I was actually looking at this page just a few minutes ago. That's why I
Uh,
know those numbers. Like so, in circulation, this is the amount, this is their reserve, right? And they will show you like how much they have issued and how much they have redeemed. By redeemed, it essentially means they have sold the asset, and they have taken the USDC out of circulation. So you will see what the change in circulation is. Like in the last 7 days, it has gone down by 0.1 billion dollars. So basically $100 million. In the last 30 days, it has gone up by $200 million. And in the last 365 days, it their circulating supply has gone up by $28.6 billion. So this is how they do it. And obviously then the question comes like, how do you know that what they are claiming, that this is the amount of reserve that they have, is how much reserve they have actually? So to prove you and to be actually transparent, they will issue this weekly or monthly reserve assurances, let's say. Let me see if I can share my other page here with this. So this is an independent account audit by Deloitte. They have looked into Circle Internet Groups, and this is what they're saying. They're saying that like they have looked into the circulation on April 3rd and April 30th, and the circulation amount is this, and against this circulation they have this amount in reserve, so they can attest to that. Now they will say like, okay, so what does this reserve fund look like what is this reserve fund consists of, what kind of assets do they hold? When you start asking this question, then you will have to basically get into a bit more in the weeds here to understand how stablecoins reserves actually work. Just to give you some understanding without like really going into the weeds here, they essentially hold this thing called US Treasury securities. So the US or any countries reserve banks will issue debts that you can buy. Like they call it government bonds that you can buy. Like there are stocks and then there are bonds. You have heard of that, right?
right, right, right.
Yeah, so bonds are like you are buying. If you buy, let's say, $1 worth of bond, that means the U.S. government or whatever government you are buying the bond from, they are borrowing $1 from you. in return of a certain
Hmm.
amount of interest, you know. And then the question is like, what kind of interest are they paying you? Depends on the stability and the of the government, the strength of that government, and the strength of that economy. The strongest economy in the world is the US economy.
Yeah.
So the interest, or as they call it in treasury, the yield on that bond will be fairly low, because the confidence in that economy is fairly high, right? So when you buy US Treasury, when you buy this US Treasury debt, it's essentially like it's a guarantee that you don't have any risk at all. So this is the least risky asset you can buy anywhere in the world. So that's what they're required to buy. They have to buy US Treasury securities and keep that in their reserve. So like a large percentage of their reserve will be US Treasury securities, and then there will be
And is it compulsory?
it's absolutely compulsory. Yes.
Why is that?
Okay.
Why is that?
Why is what compulsory? Like what kind of
That,
asset that they're buying?
yeah, like
Okay,
they
so
have
that
to get some US Treasury bills. Why is that
yeah,
compulsory?
that's compulsory because okay, so it is not compulsory as of today,
Hmm.
but it will be very soon. Now let me tell you why. Like I will actually then okay, so I will just answer your first question first and then show you like why is compulsory to have buy the US Treasury bills. It's because US Treasury bills are the safest instrument on earth. Like there is nothing less riskier than an US Treasury asset, US Treasury debt. Like you, gold is riskier than that. Stock market, forget about stock market. It's much more volatile than that. So buying US Treasury is as much as a guarantee that you are going to get this amount of interest, you know, because it will stop becoming a guarantee when the US defaults on their loans, when the US essentially goes bankrupt and they say that we cannot like you have borrowed money from us, but we cannot give you the return, the yield that we promised, you know. So that's why it's the safest instrument. Like if you can obviously buy other countries treasuries, right? You can buy the United Kingdoms, you can buy treasuries from India, for example,
But
but
they are not the
it's just like,
safest.
yeah, they are not the safest. The US is the safest. So that's why US treasury is the safest asset. So it will be like a bulk of their the reserve asset will consist of US treasury. Then in next, this will be cash. It's just basically you are holding outright USD. You know, it's just basically just for rainy day. And then there will be uh, a bit of like other stuff, like bit of like cash. Actually, you know, forget about that. Let me talk about repurchase agreements. So the primary chunk of asset will be US treasuries. Then in second will come US treasury repurchase agreements. These are I will say these are actually pretty much the same thing as United States treasuries, but slightly different in their structure. So have you ever heard of repo rates?
Yeah,
Yeah.
but
So
I've heard about the term. But if you, it would be better if you go
yeah,
over
sure, sure,
what
sure.
is that.
So a repo is a repurchase agreement. A repurchase agreement is an agreement to repurchase something essentially, right? Now, what are you repurchasing is the question. So actually, I'll have to go a lot in depth here, but let me try to break it down to you. So every reserve bank sets a interest rate target for their economy at any point of time. This interest rate target, the reserve bank that sets, this is the interest rate that a general bank can borrow from the reserve bank at this rate. Not like even me, we can what we borrow that's consumer loan. But what I'm talking about here is like what banks borrow, the rate that banks borrows from the reserve bank. Like in India, we have the Reserve Bank of India. In the United States, it's the Federal Reserve. So like what's the amount, what's the rate that a bank or a banking entity is borrowing from the Federal Reserve? So so that will be the repo rate. Uh, Essentially, yeah, no, that's not exactly the repo rate. That will be the interest on reserve balance. Now the what the interest on reserve balance means, like it's a risk free interest that you are earning if you keep your additional cash with the Federal Reserve. Like let's say you are a company, you have $1 billion in cash laying down, and you want to basically make some interest, earn some interest on that. What you do is you park uh, your cash at the Federal Reserve Bank, and in return they give you a percentage. That's what the IORB rate is. It's interest on reserve balance, right? Now this option is only available to banking entities, like banks, like credit unions and stuff like that. Now, if you are a non-banking
Like
entity,
basically commercial banks.
yeah, exactly, commercial banks and credit unions and stuff like that. Now, if you are a non-banking entity, what you will have is an overnight RRP rate, overnight reverse repurchasing agreement rate. What that means is, let's say you have $1 billion in US treasuries. Now, you want to borrow some cash against it. Okay, so what you do is you take that treasury, you give it to the Federal Reserve, and you get the cash, and the Federal Reserve pays you an interest to do so. Like, since you are borrowing it, you are giving them an interest. But let's say if you have some cash and someone else wants to borrow that cash against US treasuries, then they will basically pay you a return. It goes on like that. So the overnight reverse repurchase agreement will work like something like, you have some cash, you want some treasuries against it. They basically, the United States government, the Federal Reserve, borrows the cash from you and basically gives you, as collateral, they give you some amount of treasuries at a fixed rate. That's basically what a reverse repurchase agreement is. And this
So
is
like repo
guaranteed.
rate is commercial bank lending the money from the central bank, and reverse repo rate is just the opposite.
No, the commercial bank will have an account with the Federal Reserve, so what they will get is the IORB rate, which is
Okay.
interest on reserve balance. So anyone else who doesn't have any other commercial entity will have the repurchase agreement with them. So yeah, if you are giving them cash, then it's a repurchase agreement. If you are taking cash from them, then it's a reverse repurchase agreement. And that's basically how it works. And the interest rate is set, and by setting an interest rate in this, what happens is, like, a commercial entity, like let's say a company, would say, like, okay, I am lending this amount of money, and in return, the government is guaranteeing this rate. Like, so, yeah, and if the government guarantees something, then it's completely risk-free, especially if the US government guarantees something. So then, if they want to lend this amount of money to anyone else, then the risk goes up. Then, basically the interest rate also has to go up, go higher than the repo rate that they are getting paid by the Fed. Right. So essentially, the Fed, with this repurchase agreements, sets the lowest possible rate in a market at any time. So the Fed controls the bottom at any time at any time. So even if there is an emergency, economic emergency, the Fed will always buy this from you, and the Fed will keep you afloat. So this is basically how reverse repurchase agreements work. It's very short term, like it's less than 24 hours in general. Like every day, every single day, you lend something out, and the next day you get paid out the whole thing and plus interest. So given how short term this is essentially a guaranteed. And in banking world, the shorter something is in duration, the lower the risk is. So you always want to hold assets, or you always want to hold bonds and treasuries that are short term. Like, whenever the window gets longer and longer, the uncertainty gets much higher, right? And so you don't want uncertainty. So the United States government wants stablecoin issuers to hold securities, not securities, sorry, to hold treasuries that mature in no more than 90 days. So, like, then comes the question of, like,
So
what kind.
assets with high liquidity, that's what you're going for, right?
I won't even say high liquidity. Yeah, obviously it's highly liquid, but it's just basically the assets that are extremely safe, that are issued by the United States, and that have a short window of maturity. So what that will mean is, like, okay, so treasury debts are, there are three types of treasury debt depending on maturity. Like 7 days to 2 years, that's called a treasury bill. It generally has the lowest amount of interest because it's a very short term period. Then 2 years to 10 years will be a treasury note. a bit more interest rate because the risk gets bigger. And then you have treasury bonds, which are like 20 years to 30 years. It's basically pays you the highest amount of interest because you are betting on the US economy to do exceptionally well over the next 30 years. You know, and that's a big bet you are taking. So you want to, so they call it a term premium. It's basically you are taking a risk, so they are giving you a premium on the interest. So what you are required to hold, especially in the new act that is coming, the Genius Act, the US government is mandating you to hold like a significant chunk of 90-day or less maturity 90-day or less maturity treasury bills. Yeah, treasury bills. So that's how it works. Now, as I said, like Circle is actually much more compliant with the US regulations than Tether. So what Tether actually does is Tether obviously holds a significant chunk of US Treasury bills, but they also hold a bit of Bitcoin, a bit of precious metals like gold and stuff like that. They will hold up like other countries' treasury bills as well. So that isn't going to fly. Like if they have like once the Genius bill passes and becomes an act, that won't fly. So they will have to basically replenish their reserve with primarily with like treasury, US treasury, and this US what are these things called, like the repurchase agreements. So that's how it's going to look like. And that essentially guarantees how it always maintains a peg, because the assets are so much less riskier. Like I'll give you an example. Like, do you know? Like, I think you are familiar with this. There was this company called FTX that got blown up, and
Yeah,
this guy called SBF
Sam.
went to jail. Right? Yeah, Sam Bankman-Fried. He went to jail. Um, Now, what happened was actually like, so they. Okay, I'm blanking on it right now. I think anyways, basically Circle had a massive exposure to FTX. So when FTX dumped, a lot of people sold a lot of USDCs. Okay, so I think what happened was like, I think FTX had a lot of USDC in their balance sheet, and they instantly sold it, like billions and billions of dollars of USDC. So like for a short period of time, USDC went below $1 to about 90 cents or something like that, because they couldn't handle the sell pressure at that moment. But very quickly they came back up. So yeah, so this is what I will say is the two primary types of stable coins. Now there are other types of stable coins as well that are not as popular, and definitely not compliant with the US law that is coming. So there is this crypto collateralized stable coins. Like the primary example of that is DAI. DAI is issued by, I think, Maker. Oh my god, I should know this. Let me quickly check. Is it by Maker or not? Yeah, it's by Maker. Yeah, sorry for the hesitation. Yeah, so what DAI is essentially, it's not collateralized by USD assets, or it's not collateralized by like repos or any treasuries. It's collateralized by crypto. It's collateralized by crypto assets. What that means is it's actually not even collateralized, it's over collateralized by crypto. So like they hold a giant amount of Ethereum and other assets like that. And what they do is they hold it at 150% of collateralization. What that means is, like, for every $100 they have $150 in reserve. So
To
that's
deal with the volatility, right?
yeah,
Deal with
yeah,
the
exactly.
fluctuations.
Yeah, exactly. So if an asset breaks that 150 percent collateralization rate, they basically liquidates it and buys something else. So it's quite risky, but so far DAI has fared pretty well. Let me quickly check what the circulation of DAI is. Okay, so DAI has a market cap of $5.4 billion. So that means they have a total supply of $5.4 billion. That's not bad. That's not bad at all. But again, like something like DAI won't actually comply with the US regulations, and because the US government cannot control it. Like, for example, the new Genius law that is coming, I have actually written an article on it. I'll share it with you. I'll also put it in the description, breaking everything down. The most important factor that matters to the United States government is, can they interfere? Like, let's say they correctly pinpoint that a bunch of terrorist organizations are moving money through USDC. Can they interfere? And under the new law, or even now, they can. That means they will reach out to US Circle and say, this wallet is dealing in nefarious activities. You have to freeze that account right now. And under the genius bill that is currently in development, like they have to do it within an hour. They have to comply with that within an hour. Even to do that with banks, you have to have a federal warrant, like a warrant from a court ordering the bank to do it. Like, but in stable coins, that's actually a worrying factor that I would say. Like, I am really bullish on the bill. I really like that they're finally regulating it, but I'm also worried like how much control they're going to have with something like USDC. Like, even if you hold it and for some reason the government has decided that you haven't paid your taxes and they know what your wallet is, they can just basically just simply go and tell Circle to freeze it. That's not good at all, right? So now if you want to goes around this problem, you use something like DAI. DAI is completely decentralized. There is no authority controlling it. There is no United States government saying what to do or not. So you want to go with the decentralized option. You basically that will be DAI will be the solution for you. Now there is actually another type of stable coins that have like horrendously failed. Every time it has been tried, it has failed every single time, and it's called algorithmic stable coins. And I cannot really even explain it to you
I think
because
I was coming to that because even when I was reading about it, it said like stablecoins is backed by cash, crypto, and then the third one said algorithms or code, and I couldn't understand like how does it work.
yeah. So okay, the last time someone tried to do algorithmic stablecoin was Terra Luna back in 2021, 2022. Terra Luna crashed the stablecoin that they had, USD. It went like it completely got obliterated in that. So I haven't actually even looked into how these algorithmic stablecoins work because they are destined to fail. So there's this paradox called the death spiral. Debt spiral. Is it debt spiral? No, this is, what is it called actually? Yeah, it's a death spiral. Yeah, I'm right. Okay, so what happens essentially with an algorithmic stablecoin is, imagine this: you are taking out a loan. Okay, you are taking out a loan on a rental apartment. Now, your plan, how you want to repay that loan, is by renting it to people. Okay, so what do? Like, you have bought this apartment. It's a two-bedroom apartment. You have started renting it out, and the EMI and the rent is the same. So it's basically the apartment is paying for itself. Now, mind you, you don't have much money laying around. So you are really playing with leverages here. Like, and certainly you lose your tenant, or they say, I don't have any money right now. I cannot pay you this month. I cannot pay you next month. So you have to evict that guy. You have to get a new tenant in. It's a 5 months process, And in the meantime, you don't have any money to pay the EMI. So what happens is, then you borrow money from someone else, like you borrow money from your credit card, and then you lose your job, and you don't have any. First of all, you don't have any money, and secondly, a lot of people are chasing you because you owe them a bunch of money. So you lose everything at that point, right? So basically, when it's working, you seem like a genius because you have figured it out. You have zero money, but you own a home. The EMI is paying itself. Everything is nice. You are chilling. But the moment bad times hit, you are fucked because
It's
you
like a
you have played.
double-edged sword.
Yeah, exactly. So you have played with leverage, and in a bad market, leverage will destroy you. So that's how algorithmic stablecoins work. Algorithmic stablecoins completely depend on a host currency. So for Terra Luna, it was the Luna currency. If the Luna currency did well, the stablecoin was collateralized by that Luna currency. But the moment Luna starts fall, and what you essentially do is you sell Luna to keep the stablecoin afloat, and you try to maintain this afloat, maintain the peg. But the moment Luna goes down, you have to sell more Luna. to keep the stablecoin afloat. And the more Luna you sell, the further the price of Luna falls, right? So it's essentially like you are catching a falling knife. That's
That's a
exactly how
great
it works.
analogy. Yeah.
Yeah, that's basically that's basically how algorithmic stablecoins have repeatedly failed. And Luna wasn't the first time someone tried it. Like it had been tried previously, and it has completely, like, with almost like you can predict an algorithmic stablecoin falling, because it only works in a good market. In a bad market, it doesn't work. So that's why collateralization is important. That's why if you, even if you are not centralized, you make sure that you have over collateralized with whatever asset you have got. And the safest way is basically buy a bunch of United States treasury. If the United States government defaults, then stablecoin is the least of your worries, because then the economy is completely fucked around you. So basically this is really interesting stuff. uh, what do you think so far?
Yeah, I because this is something I was confused about. That how does code help? Like how does it work? Because cash, yes, I understand that's very natural to me. Crypto, because I'm new to it, I cannot fully trust it, but I somehow do. But
Hmm.
when I heard code, and as you said, talked about the paradox of a death
Yeah.
spiral, it because first I did not understand it. Now once I do it, like, yeah, that's what I thought, that it's supposed to
Yeah.
fail.
Yeah, exactly. It's common sense. It's no brainer, right?
Right.
Yeah, like, one more factor, like what I was talking, like, initially, like why you should hold stable coins is also think of inflation. Think of, like, in India, inflation is fairly stable. We are around 3, 4, 5, 6% any time of the year, depending on what kind of economy we are in. Right now, the government is claiming the inflation is less than 4%, which I don't completely believe, but okay. um, so, like, but look at a country like Zimbabwe. Zimbabwe is the most extreme example of what hyperinflation looks like. Like, there was a point when Zimbabwe printed $1 trillion notes in Zimbabwean currency, right? And the value of that $1 trillion note was less than the paper that it was printed on. So, like the prices of things was doubling overnight because they had completely ruptured their economy. So essentially they had to basically take their currency out of circulation and go to basically adopt US dollars as their currency, at least for like the interim period. So, like, this is the, like, most extreme example of hyperinflation, which is basically countries decide, like, okay, we have this bunch of debt. Why don't we just print more money to pay it? And that never works out. But that's the
Death
most extreme
spiral
example.
again.
Yeah, exactly. That spiral, you cannot control it. Now, look at the Turkish lira. Like, in the last 3 or 4 years, like, there was this point when the inflation rate of the Turkish lira was at 40%. That means, like, you're even if you had the same salary, like, just to earn the same amount, the next year you have to get a raise of 40% just to earn the same amount of money. So basically your savings got halved. So how do you cope against it? And that the answer is easy: hold the safest currency in the world, which is United States dollars. And how do you hold it? Like, how does an average person who earns $200 a month, which is basically, in the third world, that's a good salary, right? That's a good starting salary. So who holds $2,200, who earns $200 a month, how does this person get access to the United States dollar? You get access to it through stable coins. So it's the best anti-inflationary hedge that we have. And it also, like, this is actually the reason why the United States government is pushing for stablecoin regulation so much, is because they understand the global demand they have for US dollars. Like, I will just give you a pretty interesting example. Like, as I said, like, it's mandatory for you to buy US treasuries in your reserve for you to issue stable coins, right? So what does that mean? That means higher demand for US treasuries. That means the US government will be earning billions and billions, and probably in a few short years, trillions of dollars just from the stablecoin issuers. So that means two things. First of all, that means the government has a lot more money to basically do their own stuff. Secondly, the yields on the treasury goes down. Like it's a very easy supply and demand mechanism, right? It's like when the demand for US treasuries goes up, the amount of interest they have to pay goes down, because it's a buyer's market, sorry, it's a seller's market. And this is almost guaranteed way, like it's almost like a safe way to sell billions and billions of dollars of US treasuries without creating any new product. So they have basically found out this untapped source of revenue, and they want to maximize it. So there was this study that I was looking at. Let me see quickly if I can find out, because like this there was this research paper, and they found out that the estimates. Okay, so I will just read it quickly. Let me see if I can share my screen with this again. Yeah. Yeah, so this is it. So this estimates imply that 1% increase in Tether's market share is associated with an yield reduction of 3.8%, respectively. So given average yields of 4.16% in Q1, this corresponds to 14 to 16 basis points. Whenever you hear basis points, think 1% is 100 basis points. So
Okay.
14 basis points is 0.144%. So that means is like every time Tether increases their total circulating supply by 1%, Tether's circulating supply currently is about $150 billion. So 1% of 150 billion would be $1.5 billion. So like every time Tether buys $1.5 billion of United States security, the yield that they have to issue goes down by 14 to 16 basis points. So it's not only making the money, but it's also saving the money on interest rates. So this is why this is so interesting for the United States government. They're actually making money. And I mean, as always, whenever we are discussing like financial innovation or innovation of any kind, the United States will be like at the forefront of it, because obviously they have the smartest people, then they have the highest amount of risk appetite. Because like the last election in the United States was like a primary issue was crypto, a primary issue was Bitcoin. Trump said that they will create a Bitcoin reserve in the United States, and he has done like half of it. He has created a reserve, but that reserve only consists of the Bitcoin that they already hold. He hasn't basically promised to purchase anything on regular basis yet. But imagine an Indian election where the candidate is saying like we'll make Bitcoin a priority. That's not happening in the next 20 years, and that's why we're in the third world, right? Because they foresee these issues, and they are at the forefront of the regulations, and when they regulate it, they welcome more and more people who are building this kind of stuff. So
Right.
they give you a safe haven, right? And that's how their economy prospers. That's as simple as that. Like the easiest way for a third world country to get rich today is to buy Bitcoin and hold it for the next 50 years.
Right.
It's almost a guarantee. Obviously it's an extremely speculative and extremely volatile asset, but if you look at the fundamentals of Bitcoin, it's much better than, like, you are not accidentally going to discover a gold reserve of trillions of dollars. Gold, there is a finite supply of gold, and mining gold is an extremely tedious process, and the profit on gold mining is like very low. Like the amount, if you put in like $100, the profit you will make probably $3 or $4 of profit. Basically I'm pulling these numbers out of my ass here, but that's pretty much how it looks like. That's pretty much what the numbers are right now. But Bitcoin is pretty much, it's a no-brainer to buy for a country like India and basically hold it for the next 50 years. So what do you think? Are you bullish on stablecoins?
As far as the arguments that you have made, I think so because it's also good for the US government, as you explained. So I don't see any against argument that why people should not inculcate like usually in the daily life. So yeah, it does make sense to me. And also that, yeah, I've blanked out.
No worries. I mean, yeah, look, stablecoin is going to become like a bigger part of normal life in the like next short 5 to 3 years. The first of all, we need to get this Genius Act passed, and the regulations properly formalized and applied within the next year. Once that is done, banks are going to be much more open to basically setting up off ramps and on ramps for stablecoins. And the moment United States starts doing it, the first world in general will start doing it, and then it will slowly trickle down to countries like India as well. So yeah, definitely very very bullish on stablecoins becoming a part of the daily life within the 2 3 years, as I'm saying.
And if I've gotten this right, stablecoins also allows people to kind of get access to US dollars much more easily. Am I right
Yeah, I
in
mean,
thinking that?
stablecoins are US dollars, right?
Yeah,
Stablecoins are the equivalent of US dollars on a one-on-one basis.
like, is it, or only USDT is equivalent to US dollars?
So basically, the primary stablecoins are all USD pegged, like USDT, USDC, DAI. These are all stablecoin. Now, like they have different versions of it. Like I think Circle has an euro equivalent stablecoin as well, and Tether does as well. But the problem with the European Union is they are extremely bureaucratic and they are very skeptical of crypto. Like they will, their attitude towards crypto is like, I will die before I let anyone use crypto. That's the kind of attitude they have towards crypto. So they have this regulation called MiCA in the European Union that extreme regulates crypto like extremely stringently. They will make you follow harsh regulations. Like they want everyone to do KYC. Anyone that uses any form of crypto should be KYC. Like by KYC, it means like you give them all of your personal information, just like you do to open a bank account, right? And that's the start of it. And then they want to tax you on everything. They want to, basically monitor everything that you do, and basically interfere in your personal business. That's what the European Union believes in. So I have pretty much anyone who is in the finance industry are net bearish on Europe. Like you don't see innovation coming out of Europe as much as you see innovation coming out of the United States. I will even go as far as to say like the third world in general, the developing world is much better at innovation than the US is, than the European Union is. It's just basically they put in so many roadblocks, like in everything. Like like I'll give you an example. The European Union has mandated that every phone should have an USB-C cable that to go with, like no other sort of like no other type of what is it
Charging
called?
ports.
Cables? Yeah, charging ports will be allowed. So what that means is obviously they're thinking that they have simplified it, but they also think that USB-C is the pinnacle of innovation. Nothing better will ever come after USB-C. Now let's say,
Controlling it, they limit innovation.
yeah, exactly. Now they are saying that it basically makes everything easier, right? Now what if someone comes up with a better port, a better charging system next year, a better data sharing system next year? To change that law, they will take 10 years. So that by then, Europe will be stuck using something that is not the pinnacle of innovation, let's say. Yeah, so net short, you should be bearish on the European Union, you should be bearish on Europe in general, and you should be bullish on United States. And hopefully, the developing countries like India catches up to it, wisens up to the moves that the US is making and at least imitates towards doing the same thing. All right, man. I think we have enough for one day.
Yeah,
Uh,
first of all, thanks for the call. I had bunch of confusions. Now I have even some more questions that I would love to keep up, learn about in the next call and the next episode
yeah,
that
yeah,
we do.
absolutely. Let's do it. Write it down. I'll also let's see what we can cover in the next episode, and hopefully we'll have some update on the Genius Act as well, and
Hmm.
then we can go into that side of things and see like what interesting stuff are happening there. Anyways,
And
thank you
and
everyone.
also, you want to say something? You want to end
No, no,
it?
no.
I had
Go,
to
go,
say
go.
something that
Yeah.
also we can also for the audience we can also see it as you can see how much good of a teacher Romeo is and how much good of a student I am as the episodes go. So
Oh
my
yeah, yeah.
goal is to
I
learn
mean,
as much as possible as the episodes go on. so that you guys, because I will be asking the stupid questions because I have zero clue. So people who might have any stupid question that are free to ask, use me as decoy. I will do the all the stupid questions.
And no questions are stupid here. No, this is
Yeah.
basically a very
And also,
niche
if you're stupid
niche
only for
thing.
once, once you ask a stupid
Yeah.
question, you just become
Yeah,
slightly more
yeah,
wiser.
absolutely. Yeah, absolutely. So it's my goal is to basically break down everything that I know and everything that I'm learning
Hmm.
every day in terms that not even in terms, like for example, Wall Street uses terms that are completely unnecessary, like just a
Yeah.
huge jargons that are completely unnecessary. You can just use simpler words, but they don't, because they want to show that they understand more than you, that they are more educated
Hmm.
than you, they're smarter than you. But you don't have to go into like in jargons to that extent. Yeah, so I will try to keep everything as straightforward as possible and use as many real world examples as possible. And yeah, let's see where it takes us.
Yep.
Super excited, man. Bye bye.
Same. Yeah. Bye bye.